In today's video, I'll go through and explain how I arrive at this specific fractal. This fractal has Doge going to 46,716 by the 10th of August and coming down to 15,218 by the 2nd of June 2024. Let's run the numbers. Before we get started, I'll be taking the structural levels from Doge from the indicator provided by CTKS Method.org. Now, let's get into it. On the 23rd of May 2024, the spot Ethereum ETF was approved. We did have a spot Bitcoin ETF approved on the 10th of January 2024, and what we saw with Doge was that we had about a 12% drop, followed by about a 207% rally. Now, just taking that fractal of price, which you can see here, and overlaying it on the current price of Doge, from that particular announcement, just going forward to the 10th of August 2024, that's how we get that fractal. We're just copying this price behavior just to this point. Of course, copying it doesn't mean it's going to come true, but it just gives us a bit of a guide in terms of what the market has done beforehand. Many people thought the spot Bitcoin ETF would just explode all of cryptos right around the crypto universe. Instead, it didn't do so. Actually, Bitcoin declined for quite some time, and then we saw an explosive move. But it shook a lot of people out of the market. Just zooming in to Dogecoin on a daily basis, we can see that fractal is basically playing out quite reasonably at the current time. We did have a bit of a spike and it's now retraced. Will it go flat and will it go down before it starts to pump? Please let me know what your thoughts are in the comments. What we're tracking here is one potential movement in price. Now let's just zoom out a little bit to see how this could play out. If we do in fact come down to that 15,218 mark, that will be a fantastic buying opportunity. And you can see price is always moving in a wave. If the fractal, the previous fractal, plays out, we're going to have a lot of consolidation, at least basically until the end of June, until it gets going. But boy, oh boy, when it gets going, it's going to really get going. And that is if the past fractal is applicable to this price action. Something really interesting to note here. We could get a movement up to that 42,350 mark and then a movement down to around that 24,940 mark. So even if price is coming up, just expect the price can come down as well. The other thing to remember, this is a past price fractal, so this up and down movement is very normal inside financial markets. And if we're looking at applying this particular fractal, and it does in fact close out on the 10th of August at 46,716, that's going to leave a lot of Doge holders very, very well off. Price fractals can give us a fairly good idea of how price could interrelate with the current price, future prices that is. But just always know, fractals are past price behavior. They are not necessarily something that we can bank on. You need three simultaneous strategies: an up strategy, a neutral strategy, and a down strategy, playing out at all times. What's actually most important to us are the structural levels. When we look at Doge, we can't just say structurally, this is a level of structure and that's a level of structural resistance, and this is a level of support and also this, because Doge has been around in excess of 3,700 days, not just a couple of weeks. Therefore, let's pop on the indicator and see what the structure is telling us. Zooming in to the current price action, we can see there are a number of structural support levels just below the current price of Doge. What we actually saw recently was Doge come up to this structural resistance line and fail to confirm it as support. A failure to confirm as support means it's seeking to go down to the next batch of structural levels. So this is something that you must keep in mind. Price is always moving in a wave between structural levels. You can see that we didn't make this one, we came back. We made it, We came back. We tried to get above, couldn't confirm a support, tried again. This puts these levels of structural support into the market as probabilities. And the interesting thing is that the fractal is saying something similar. The lines that are drawn here for structural resistance and structural support are the strongest and most statistically significant structural resistance and structural support lines that you can place on any chart. It requires 2 levels of standard certification to draw these lines, and these lines are drawn out throughout the entirety of price history, not recent indicative price, which tends to RIP your money. So we can see this particular line of structural resistance is at that 17,119 level. If we're going to confirm that as support and move to higher levels, we must see a genuine retracement and a progression from that level upwards. However, if weakness enters the market, we would expect to make our way down in a wave-based function like this and challenge these particular levels. The first one at 15,796 and the second one at 15,541. When it comes to structural levels or CTKS levels, what you see is a greater aggregation, is a stronger area of structural support. If we sell down, we expect the price will be captured by these areas and be flung back to the resistance level above it. Right now, if we're trying to stack probabilities, we can see that we made a high here and a lower high here. That means the sellers are constantly pushing the price of Doge down just at the current time. This puts the stack probabilities of lower levels in play at the current time. But things can change around quite dramatically in the crypto market. Just keep your eyes on these structural levels and see what actually price does, because that's the reality. What typically happens is people look at a price chart and realistically don't know where the structural support and structural resistance levels are. And what do? They just take recent indicative price and say that every time it came down and bounced, that must have been a structural support level. Well, that's not actually the case. Having been inside financial markets for nearly 4 decades, I can say one thing: structure will override the news. It overrides everything. And when you look at structure with your 3-dimensional decision making, that is, that you know price is always moving up and also moving down. There are periods when it just moves sideways as well. That's the understanding that will make you very, very wealthy. You always want to buy as price is coming down, but you want to concentrate your buy orders at structural support levels. That means you need to know where they are. The really interesting thing, when we look at this 15,218 mark, which is just the fractal low, we can see it's a little bit below this structural support level at 15,541, and it's just a little bit above this next level of structural support at 14,788. It's just about midway between them. And it's always important to understand these don't act as brick walls. Price can penetrate them, but when they just accumulate together, they get stronger and stronger. For example, when price is coming up, if you've got a strong overhead structural resistance level and then another one, that makes it really difficult for price to get through. And always bear in mind that this kind of particular price action, when you come down and you find structural support, is always meant to draw the shorts into the market. This upward price momentum always draws the longs in. So that's why if you get a big push up, you're drawing extensively a lot of longs into the market, and they will get liquidated to the shorts. And if you come down to these structural support levels, you're drawing more and more shorts into the market, and they will get liquidated by the longs. Everything comes down to structure. That's why you'll find the CTKS structure actually determines the price waves. Price is just moving between structural levels. You've seen a little bit of a zoom in on Doge's structural levels, but with the indicator you can zoom out quite a bit. And all of the structural levels, for example, on the Tier 1 charts, the S&P 500, the NASDAQ, the VIX, the DXY, Bitcoin, gold, US oil, junk bonds, the US 10 and total, as well as the Tier 2 and the Tier 3 charts are available from CTKS Method.org. And if you would like to learn how to draw those structural levels yourself, go across to ctksmethod.org and you'll see the 2 levels of certification. In the next video, we'll be talking about ADAs, possible price projections, both to the downside and to the upside. We spoke about Solana's fractal in the last video, and we can see just at the current time it's going quite well, quite nicely, just reflecting what the fractal has been laid out for us. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.